Hey traders, Stephen Kowitzel here with the tradersplan.com. I'm going to take stock of the market and what's really trending in the market today. It's been a while since I've done a webinar, so I don't like to overanalyze every single day what the market's doing, but I like to give it a little time. I think it's time that we've been on the back end of a nice uptrend that we really look at things and kind of peek under the hood and see what's going on. As a quick disclosure, this is not a recommendation to buy or sell any stocks, ETFs, or securities. Please do your own homework. This is for entertainment purposes only. So we're looking at the Nasdaq right here on the daily chart, and you can see the Nasdaq. If you look over here in the thumbnail, it's struggling a little bit. Like, it is starting to change its character. You have this nice uptrend and then boom, and then it's kind of really just starting to get a little choppy and a little sloppy. So you really always need to pay attention, because once a stock or an ETF or an index starts to change its character, that's when you need to consider your next strategy, right? Whether you're going to raise the stops or you're going to be looking to buy on a pullback, but you always want to be planning for this. Now, this has been a really, really good trend, and I drew these trading ranges because, we've been in a lot of trading ranges as of the last couple of years. We had a trading range right here. This was at the end of 2015. The trading range broke, and then we just had a massive waterfall effect. Double bottom, another trading range, resistance, and then this was the Brexit right here. Broke the trading range. Shook me out, I'll tell you that much. Shook me out because after studying what happened when the last trading range broke, I didn't want to be sitting through something like this. So I was mostly cash, but I had a couple stocks. Shook me out, and then it just turned around and just went on a massive uptrend. And I'll be honest with you, I'm really surprised this happened. But the rules brought me back. The rules I had in my trading plan brought me back in the market, kind of kicking and screaming, because I was expecting this to happen, but it didn't. So always make sure you have rules that if the market doesn't do what you think you're going to do, you have to follow the trend. And the trend was up. It's undeniable. And it was actually a really strong trend. It wasn't a trend that was just utilities and consumer staples leading. It was really a growth stock trend, which is very positive and gives me a lot more confidence more and more that we might not have the big one, as I call it, that huge, massive bear market that everyone's been waiting on, and that we might just get a pullback to this 5,000 level in the Nasdaq. This is kind of the next testing level. If we get a nice 4 to 5% pullback, it'd really be good to test these points right here. So if you're starting to take some profits, which I would probably consider doing if you have some short-term trades, and then the market pulls back and the Nasdaq is in the 5,000 area, I'd probably look to if you're looking to buy some pullbacks, maybe take a stab at a couple things right here. I want to scroll down. Now, this is the Nasdaq versus the S&P 500, and if the line is going up, that means the Nasdaq is outperforming the S&P 500. So in bull markets, the Nasdaq does outperform the S&P 500. So really, since Brexit right here, the Nasdaq just went on a charge, and what possibly could have happened is the market was planning on some kind of Brexit all along, or the Brexit was the uncertainty that was holding the market back. And as soon as the announcement hit, it just shook some people out and then it just charged higher. So the market was looking like it wanted to be higher all along. It was just waiting for that Brexit news, and then boom, shook people out. Got all the shorts. Now all the shorts are covering and push this market up. But this was very solid from a sector strength standpoint. Now let me look at the weekly chart. So now this is the weekly chart. If you've seen my What's Trending webinars before, you know that I've really drawn this long rectangle trading range on the Nasdaq. It broke to new highs. You must respect that. No matter what you think about what the market should be doing, and don't get me wrong, when the market was around here, I was thinking it would eventually be down here. But no matter what you think the market should be doing, the market broke out to all-time highs. The Nasdaq did. You must respect that. Now, does that mean it's going to go up 50%? We're going to enter a next mega cycle? Not yet. But to me, the way I see it, the likelihood of that happening is now, without a 30% correction, is now much, much higher because of this trend right here. And we ate through all this overhead resistance. So the way I'm seeing it right now with the really, and what's given me a lot of confidence is the sector strength, right? The technology, the financials are really leading, and we're going to look at that in a second. That's given me the confidence to show me that institutions are willing to go more aggressive. Market's due for a pullback, most certainly. But I'm going to look and see how these more aggressive sectors handle the pullbacks, and if they're pulling back nicely, like right around here, that's probably where I'm going to look to get long, and I'll close out up here and might start to get back in down here. So now the breadth, let me look at the S&P 500, the breadth indicators. Okay, so this is the S&P 500 on the weekly chart. You can see that it broke its trading range and broke out to an all-time high right here. And it's right around its all-time high. It's pulling back a little bit this week. It's down about 1% as of now. But if we look down here, let's look at, so the market's at an all-time high. This is the percent of stocks above the 20-day moving average. It's starting to pull back. So that short term, now this is very short term. The short-term breadth is starting to deteriorate a little bit within the S&P 500. You now only have 56% of the stocks that are above their 20-day. You have 65% above the 50-day. And you have 78% above the 200-day. And what that means is the long-term trends are really starting to turn around. When you have a higher 200-day, it means that really this could potentially be a smaller pullback. Now, you always want to make sure, but right now, the fact that the higher percent is above the 200-day, it just, to me, it shows me that we could just enter another trading range or another pullback before the market continues its advancement. Now, if we go down here, the percent of the NYSE stocks that are above its 50-day, again, these were deteriorating along with the S&P 500. So 69% are above its 50-day moving average. 79% is above its 200-day moving average. That's pretty high. That means that we're in a nice uptrend, but I could signal overbought. But the fact that this trend is moving higher, is good. So the breadth indicators on the short term are kind of rolling over just a little bit, meaning it's could be a kind of a yellow flag, early sign of we need a small pullback. But for the most part, on the 200-day moving averages, I like what I'm seeing as far as long-term trends go. Now, I want to look at a chart of oil, light crude, because it's doing some interesting things. So this is the daily chart of light crude, Brent. And so the oil bottomed at $26 down here. It went up to 52, so it doubled. And then it kind of pulled back and did a retracement. And now it just surged higher the last several weeks and is pulling back. This is looking kind of like a little handle that might break out. If oil breaks out above this pivot right here, I think we're going to get another trend. Do not wait. If you really like oil stocks and you like energy stocks, which I do, as a longer term play, right? Do not wait until oil is 65 or 70 to start buying, exploration stocks, because by that time all the price of oil is already cooked into the prices of the stock, and you will have missed the move. So the way I see this, if I kind of annotate this a little bit, right, you have a breakout here. You have a breakout of kind of this double bottom right here. All right, whoops, didn't mean to do that. So you got this double bottom breakout. It comes down, it hits resistance at that 200-day, finds support at the 50-day, charges higher, and is now really just trading sideways. So oil really hasn't done much in the last couple months because it's just pretty much at the same price. But I mean, if you look at it from a larger, this oil is in a trading range right now, and it tested on the weekly chart. It broke on the daily chart the 200-day moving average, the oil did. But I want to go over on the weekly chart and show you where the support came in on. Look at this long here. Let me try to let me see if I can shorten this. Okay, so look at this long candle right here. Like, look at the support on the weekly chart on this 200-day. Actually, let me change this to a 40-week. It's probably not too far off. It might mess with it a little. Okay, so look at this 40-week moving average, which is also the 200-day. It came down, it broke, but by the end of the week, it found support. Look at that long candle. So there is significant support in oil around the $40. Right now, it's 47. It's looking like it came down, it bounced, had that weekly upside reversal. That's a buy signal, okay? When you have just this flush out low, and by the end of the week, it closes slightly higher than it opened. And then a surge, it's going to hit a little resistance, and it's drifting backwards. If it drifts backwards a little much further, you might consider taking a stab at it at some oil stocks. I think it'd be a good long-term opportunity before the oil charges higher. If it does hit that 65, 70, it'll really be too late to invest in it. So the action that's happening in oil, especially with this weekly upside reversal that happened last week, is very, very constructive. So I think this is a good long-term play and something to really, really keep your eye on. Now let's go over to our good friend GDX. This is gold miners, has made a monster run. This ETF went from 12 bucks to 31. It almost tripled, which is nuts. If you remember at the very beginning of this webinar, I was talking about when something starts to change character, you really need to pay attention. GDX, the gold miners, are starting to change their character. If you can see, it's mostly found support at this 10-week or the 50-day, right? Now, this week, it has completely sliced below it in an above average volume. That would be a sell signal. So if you're sitting on some nice gains in miners, I would be really cautious on giving it too much more room to hang itself. I'd probably consider taking some profits. Me, just based on the run, I'm not looking to buy these little pullbacks. If it pulls back, something like way down here, like a much deeper correction, I'd be more on board for that. But you can see just the trend has been so massive, and it's only broke the 10-week once, and now it just completely just sliced through it. This is a sell signal in my opinion. Now it could bounce back the next week and go off to Never Never Land, but it's changing its character. People are definitely taking profits. It's showing that on the chart, so I would just be cautious. If you have profits in miners, or if you're looking to buy pullbacks, I probably think there's going to be a bigger pullback and a greater opportunity than where it's at right now. Okay, so let's move on to UNG. The commodity right now, if I were to invest in one, it would be natural gas is looking very interesting. Where did that go? Okay, so we see UNG natural gas on the daily chart, and it surged off of this 578 level. Now this is the ETF. It surged off 578, created a trading range, broke out, busted through the red line, which is the 200-day. It's in a trading range right now, but it's funny, where the bottom of this trading range is the top of this trading range, very close. So what was resistance turns into support. I believe this has the potential to keep stair-stepping its way higher. Now, commodities do not quite move like stocks. They don't quite find the support at moving averages like stocks do. They really, really do have a mind of their own, and the fundamentals can change very, very quickly. So I would just be cautious. But right now, I think natural gas is looking like it's a long-term play. If it breaks this level right here, I wouldn't come close to it. I would just let it work itself out, because if it breaks support, there's no reason to stay in it, because now you don't know where the next floor is. If it breaks support, maybe it could go all the way down here. I don't give investments that much room to go unless you just have a really, really long-term play. But if we look on the weekly chart, actually, let me go way, way back. Let's go on the monthly chart. Let's go on the monthly chart, 10 years. So if you look on the monthly chart, like, this has just been in a long, long downtrend, and it, You can see this massive volume spike. My point is, on showing you this monthly chart, commodities can go down to, I mean, just for years and years and years and never seem to find a bottom. So I'm not a big fan of buying an individual commodity and holding it for a long time like natural gas. I think gold is a little bit different, but I don't think this is the kind of investment where you just buy and hold. You really want to make sure that you kind of keep an eye on it to make sure that it's moving in the right direction or being constructive. Now, let's go over to the sector summary. Kind of peek under the hood. You can say today on Friday, we got healthcare, financials are still kind of hanging in there. Utilities are selling off. So, the market's being uncertain, but utilities and consumer staples are still not looking hot, which is positive. That means that money is staying in the aggressive area. So let's look at the last week. The last week, you got financials and technology. All right, so we've pretty much had a mixed bag, a flat week, and that's okay. I'm more interested in what's the trend the last month. The last month, you got energy, you got the XLE, technology, and financials. So if we do get a market pullback, these are probably the sectors. If we get a 5 to 10% pullback in the market, which is probably going to happen at some point in time, these are probably the sectors you want to consider if you're looking at ETF pullbacks or if you're looking at individual stocks, because these are proving to be the strongest sectors on this most recent uptrend. And if the market pulls back constructively and then continues its advancement, you definitely want to continue with those strong sectors. So let's look at XLE. If we break it down by subsectors, right, by industries, it's really not even close. You have the exploration and production stocks that are outperforming. So if you wanted to go even deeper, you could find an ITF on exploring oil stocks. But let's kind of look at this and see. Okay, so yeah, this is ridiculous. I mean, look at these rates of returns. It's just in the last month in the exploration and production. You got Chesapeake that's up there. Trying to just look at Rice Energy, just some stocks that I'm familiar with. I don't typically mess with a lot of low price stocks, but I mean, you can really see. I wonder if there's some scooter rankings. Yep. So I mean, really, you can see. I like Parsley. Parsley's kind of been looking interesting. It's been in a nice trend, gapped up, and then it's kind of trading sideways. So it's a healthy looking stock, and it's got strong fundamentals. But you can really see all the stocks in the group are moving up. So it's a very, very, very strong group. Something to probably consider on an ETF side, buying pullbacks. Actually, here, let me go back. So you got energy, exploration, and production. If you're going to focus within an XLE or within the energy sector, you really want to niche down. This is the most, compared to the price of oil, it's going to move up or down, right? So if oil is going to move up, this sector right here is going to move up the most, and vice versa. So again, a lot of the future price of oil is probably already priced in the stock. So if oil gets to 65 or 70, it's probably going to be too late. It's not really going to be considered a good long-term investment because all the buying's been happening. Pipelines, MLP, are still looking pretty solid over the last month. Nice dividend-paying stocks and ETFs out there that have high yields. So let's go back to the sectors. Let's look at the technology sector. We'll go back to the 1 month. Technology, I love seeing technology up there because that's where a lot of the growth stocks, a lot of the solid fundamentals come into play. Very, very strong. You got computer hardware, consumer electronics, and the internet, kind of like your Googles, your Facebooks of the world. But we can kind of go in here and just look at the computer hardware and see, what has really done the best. Okay, you got some low price stock, network appliance. You got 3D. Oh, this is something that I wanted to point out. So 3D and Stratasys, these are the printing companies, 3D printing companies. I want to look at a weekly chart on this just to show you this is looking like it's a turnaround story. Now, I have a love-hate relationship with Triple D, and I'm not going to talk about it right now, but look, it went from 97 to 6. Now, the fact that it went to 6, that doesn't bother me. It probably was worth $6 at the time. Probably was an efficient price. But look at the surge that's happened. Look at the cross that's happened. Look at the fact now you had this boom, this just sell off right here. But look at the fact that it's just consolidating sideways now. So a lot of these 3D companies, I think, are going to be turnaround stories here pretty soon. So something to kind of keep our eye on, and maybe that is why the sector is so strong as well. I know Stratasys is in there as well. You got Apple stocks, and then some other names. But computer hardware seems to be a strong sector. Let's go back. Consumer electronics and internet. All right, consumer electronics. I know you got Harman, Panasonic, Sony. So Sharp. This is kind of a penny stock. I'm not really familiar with it, but I don't deal with penny stocks. But just kind of show you. So technology and energy is really where it's at. You can also look at financials. And focus right here. This is probably where you need to focus on when you're looking at buying, right? And you got the financials. I'm just kind of curious what's done. Investment services. So probably a lot of your Goldman Sachs, your Charles Schwab's, things like that. But here's a positive thing. All the REITs are at the bottom. REITs are dividend paying, really defensive stocks, right? When people are looking for yield, they'll go to REITs. So the fact that these are being sold off in the last month, I would see as a positive sign for if you're a bull. So that's a positive sign. So, and if we kind of just continue to dive into that, you know, materials, that's probably where a lot of your metals are going to be. They really need a pullback, and they're looking like they're starting to weaken. So I would really be cautious. Healthcare is just not looking good, although biotechs are looking like they're starting to pop a little bit. Utilities and the defensive are towards the bottom. Now, that might flip-flop. You know, when the market corrects, the utilities might get strong. But it's just, they're weak right now. And if they're weak in a strong market, I'd be a little bit cautious. Now, I want to talk about emerging markets for a little bit. I've been talking about emerging markets really since the end of last year, but I want to really show you a chart that I think is a really good chart that'll just solid line. I wonder if we could do a 10-year chart. Okay, so let me get all this other stuff, and I'll show you what this means. Okay, so this is emerging markets against the SPDR ETF 500 ETF. So basically what this is telling us is, like, if the line is trending down, that means the S&P 500 is outperforming emerging markets. If the line is trending up, that means emerging markets is going to outperform the S&P 500. Emerging markets have been beat up so bad since really 2011, since oil and gold and a lot of things topped. They're really starting to turn around and perk up. Now this EEM, that's kind of the benchmark, but there's a lot of individuals, countries that are looking extremely strong. Really, the BRIC countries are looking really strong right now. I truly and honestly believe that you see this long-term chart right here. I truly and honestly believe that the next 5 to 7 to 10 years, this is going to be the reverse. And emerging markets are going to just kick the crap out of the U.S. markets. For a lot of reasons. One, it's been beaten up. But the fundamentals are starting to change. Commodities are starting to turn around. Gold, oil, natural gas, metals. So a lot of these things that emerging markets depend on from an exporting standpoint, they're really starting to perk up. And if that happens, emerging market countries like the Brazils, the South Africas of the world, they're really going to participate in the upside. So I think that over the next 5 years, you can call me on it, but I think emerging markets are going to beat the snot out of the U.S. markets. Now, emerging markets are more volatile, right? So it doesn't mean put a ton of your money in emerging markets, because it's very volatile. You got some countries in there like China, but they're really starting to look like they want to enter a new bull market. They're looking like they're starting to want to bottom. And based on what I'm seeing right now, and the fact that now this is starting to clear some pivots, I think that the emerging markets is the place to be over the next 5 to 10. With that being said, I want to show you something that is a trend right now, and that is an undeniable trend. So this is a chart. This is Crane Shares CSI China Internet ETF. So QUEB is the ticker. And what this is this is Chinese internet stocks, right? This is an ETF of Chinese internet stocks. So, you know, the Chinese YouTubes, the Chinese Googles, all that good stuff, they're all in here. So here's an interesting chart. Now, this is a weekly chart, but this is something that I've really been watching, and I've been seeing a lot. The Weibos, the Baozuns, a lot of these Chinese stocks are just taking off into the stratosphere right now. But if you look at the ETF, the collect as a whole, here's what's interesting to me. You got just sloppy consolidation. You got a smaller consolidation, and then the consolidation gets really, really tight. As it's getting tight, you have all this volume, all this accumulation stepping into these stocks, then boom, it breaks out of a long-term downtrend and is just not really looking back. And the ETF's been up like 25% in the last, looks like about 8 weeks, so about 2 months. So we're probably since the Brexit, it's most certainly over doubled the performance of the U.S. market. So the Chinese internet stocks are really, really looking strong right now. This isn't a buy or sell recommendation, but what I'm just showing you is there are trends in Asia right now that are really starting to perk up. And when investors are looking for growth, they're looking for earnings, they're looking for sales, they're looking for return on equity. You know, a lot of these Chinese companies, they have it, right? Because they just have exponential growth opportunities within their country as far as a percent of the population that is not even online yet. So I've been looking at this ETF with great interest, one, based on the patterns, and two, based on the individual stocks that I've been looking at that are really, really outperforming in a big way right now. So, and I'm looking at a lot of these individual countries, like here, Brazil. Brazil, this is the Brazil ETF. It went from 17 to 35. So the Brazil stock market has doubled since the beginning of the year. That's crazy considering they are literally in a Great Depression type of scenario, but it has. And what that's telling me is either one of a couple things. One, they're expecting political change, or two, they're expecting to get out of the depressions sooner than later, or at least out of depression and into recession mode. Markets bottom way before you're out of a recession because investors, the savvy ones, they're looking forward. They're looking at earnings forward. So something is telling them that they think that there's going to be change in the Brazilian economy. They might be pricing this in way too early, but it's happening. So you can't sit here and argue why it's happening or why the Brazilian government is corrupt. It's happening. The market is doubling. So when that happens, no matter why it's happening, you need to pay attention. So I'm going to look at the BRIC countries right now. You got Brazil, you got China. It's the FXI. So from 51 to 27 now is uptrending, right? Kind of looking for a pullback right here. But it broke out of, if we kind of annotate this, it broke out of this consolidation right here and it's moving higher, right? It's the golden cross is happening. You need to start paying attention, right? You've seen China's bull markets. They are absolutely nothing like the U.S. markets. They can double and triple in several years. So it's same thing with SMIN. India. Now, this is the India small cap ETF. It's really outperforming the large cap, or the Indy 50. But look, it's almost at an all-time high, and it really hasn't been there since 15 months. Again, start to pay attention because it's starting to do something that it hasn't done in a very long time. Same thing with Russia. Now, Russia, it is real. Here, I want to go to the monthly chart first just to show you how bad this thing is beaten up. Oh, that didn't really help. I wonder how far back I can go. Okay, so this Russia ETF went from spiked at 28 and is now at half of that. And it's starting to break out of its downtrend and starting to move higher. So we'll go back to the weekly chart and then let's go back to the 2-year chart so you can get a better glimpse of what's happening today. So you got this sloppy bottoming pattern, but then if I annotate this a little bit, look, it broke out and now it is trading sideways in this trading range right here, and it's looking like it wants to break out again and move higher. Okay, so it broke out from the bottom, it's trading sideways, and it's looking like it wants to break out. So you have all these, really the BRIC countries, and I'm looking at a lot of countries. The BRIC countries are really, really looking strong. And if you wanted to know what a BRIC ETF, was that right? IBK, maybe it's IKB. Let me look right here. It is IBK. Okay. I don't know why it's not showing up. IBK. Huh, that's weird. Anyways, you have a lot of the BRIC countries that are really starting to look like they are a turnaround story as well. So kind of a quick recap, right? I want to recap like what potential action items can you really put into place? Couple things. Nasdaq, S&P, they're at all-time new highs. You need to respect that. I think the Nasdaq could potentially pull back to the 5,000 level and find support as long-term support. The breadth indicators, the short-term indicators are kind of showing us there probably is some yellow flags and the market is going to pull back. GDX, all the gold miners are looking like they're starting to break support, so I'd be careful on that. Oil, I believe, is looking like it wants to pop higher, so the exploration stocks are going to do the best, or are proving that they're doing the best. So like an XLE as an energy play looked very good. I want to show you one more thing about XLE. Is when oil was slicing through its 200-day moving average, and even though it found support on the weekly chart, these energy stocks were holding. So you can see it came kind of close to the 200-day moving average, but it never broke. That shows me that there's more strengths in the energy stocks, because even though the oil was in a downtrend, it officially hit a bear market at 20% and it immediately turned around. The stocks are really sitting there trading tight, so it shows me strength. The UNG, I believe, is a commodity, is really looking interesting to me. But emerging markets, the BRIC countries right now, you know, if you want to wait for a pullback, that's okay. But I think that as a collective whole, you know, the emerging markets over the next 5 years are going to continue to significantly outperform the S&P 500 just based on pure fundamentals and the fact that they're beating up. So when the Nasdaq and the market pulls back, I would be looking in the energy sectors, in the financials, in the technologies to buy the strongest stocks. And in the international sectors, I'd be looking at the BRIC countries, but I'd also be looking at Chinese internet stocks because they are doubling and tripling right before my eyes. And I'm just looking at them, and I have seen what Chinese internet stocks can do. Like you see a VIP shop, and I don't know if anyone really remembers this stock, but let me go back maybe 5 years. But this stock, now this is broken down a little bit by shares. This has been a split, so it was at like 20 bucks, but it went from like, you know, $1 to $30 in 3 years. And it has solid triple-digit fundamentals to back it. So you have some of these Chinese stocks. They can really, really move, and they can really move fast and move in a really, really long way, really, really quickly. Now this, I'm not telling you to go out and buy this, but this is just a great example of what some of the growth can do. So let me know if you have any questions. I hope this was helpful. I hope you have a great weekend.